Okay, thank you so much.
Hello, and welcome to Lunch and Learn with the very lovely Alicia Ireland from Cornflower Accountants and from the Exeter Hub. Alicia, thank you so much for making time today for making tax digital. I know it's one that's, well, I don't know if close to hearts is quite the right turn of phrase, but I know it's probably playing on a lot of people's minds. So thank you so much for delivering this talk. Just to remind you with Lunch and Learn, we do mean it when we say if you want to turn up and almost treat us like a radio show and turn your screens off. That's absolutely fine if you want to do that. But if you find it better to keep you accountable, I know I do by keeping your camera on, please do that as well. And also, it's always nice to see your faces. So we'll do it in a way that works for you. I'm going to hand over now to Alicia because you do not want Faye Dicker's input on this. Alicia is your go-to for this. So Alicia, thank you very much, and over to you.
Thank you very much, Pam. Hi, right, okay, so I know some of you, obviously through Freelance Mum. For those of you who don't know me, I'm Alicia and I own Cornflower Accountants. I set this business up back in 2020, good old COVID times. And it's just kind of run away with itself, really, which is amazing. And I can't really complain. And in that time, I've managed to have a little boy who's now 4 years old. And I'm also pregnant again with another little boy. And yeah, it's just been an amazing experience, I have to say. And I do really, really enjoy helping freelance mums. That is be a freelance mum. I do have a kind of a separate tranche to my business where I deal with a lot of expats, but predominantly I would say probably three-quarters of my clients are kind of freelance mum individuals. So I'm going to try and talk you through the brief overview of accounting and tax, which I'm sure some of you will understand this already, but it's sometimes nice just to go over the basics. And then I'll also touch upon making tax digital because that is coming into play as well. So I'll just talk about kind of income as a freelancer, what that means, some kind of tax basics, accounting basics, bookkeeping, making tax digital, which I know is the biggie that's coming in for everybody. And then I'll just finish up with a few kind of tips and tricks and some places that you can potentially find some more information if you need to. So if we start off talking about your income, now, as freelance mums, generally speaking, a lot of people, depending on the career that you're in, the trade that you're in, you will have different kinds of income. So a lot of it will come from kind of client-focused work, so actual projects, bits and bobs that you're kind of receiving income for. Sometimes it can be just kind of ad hoc advice, consultancy advice. Some of you may be selling products online, so digital products or actual physical products online. And some people do also receive royalties. Now, what I would say from an accounting point of view, it is quite handy to try and keep things separate. So, trying to categorize your incomes into the different streams is quite important, and it will just help further down the line with making tax digital for argument's sake, but also just cash flow in general. It is handy to kind of keep track of things like that. Um, it does also mean if you're keeping track of everything, you have less likely errors when you come to complete your tax return, maybe. Some people can potentially miss off an income source if they're not accurately kind of keeping track of all the different income streams that they've got. One of the biggest tips that I would say with trying to keep track of everything is to separate your banking. So try not to have all of your whether it's personal and business in one bank account. What I would suggest is trying to keep things separate. So whether that means having one business bank account for all of your business income, or if you've maybe got different income streams, you can have a couple of business bank accounts, but always trying to keep it separate from your personal. That is definitely best practice and something that I recommend to all clients. It's just easier to keep track of everything income and expenses, cash flows, literally everything. Especially when we come to making tax digital, it is something that unfortunately will be required. So it will be kind of a necessity because you'll be linking your business bank account to your accounting software if you're not already doing this now. So you can't really have personal bits flying in and out because it would just make it far too muddy in quotation marks to keep track of everything moving forward. Um, What I would say, and I'm going to harp on about this a lot throughout this, so apologies, is making sure that you keep accurate records of everything, income, expenses, everything. It is really important, and I'm not just saying that, it really is really important. So making sure you're keeping track of everything, income and expenditure wise, really helps see your cash flow position, whether you're looking at that weekly, monthly, quarterly, annually, it doesn't really matter. It is really important to keep track of everything. And then you've always got a really good viewpoint on where your business is at that precise moment. Um, HMRC do dictate that you should keep your tax records for 5 years and 10 months. Just keep them for 6 years, that's fine. What I would say is with MTD coming in and with using accounting software, it is quite handy actually, because you won't necessarily need to keep the paper files. So before, when you used to have like a wodge of paperwork, receipts, whatever for each tax year, you don't necessarily need that anymore. You're more than fine just to keep the accounting software, mainly because most accounting softwares will have the facility or the function, the app, whatever, to be able to take like a photograph of a receipt, or you can email a copy of an invoice receipt that's in your email inbox to your accounting software, and it will keep it all electronically on or paper copy anymore. So it just reduces the amount you have to store away for a later date. Um, what I would say with tax, so basics for tax, this is all things that you're probably all already done and should be kind of aware of as such, but I will just quickly run through it. You need to register with HMRC as soon as you're self-employed. They do actually dictate that you should do it within 3 months of starting your self-employment. What I would say is I've never actually seen a penalty for somebody registering late. That doesn't mean that they can't penalise you. I've just never seen one. So I don't know. They'll probably start now I've said that, but I've never actually seen somebody get a penalty for registering late, so it's not the end of the world. Um, what will happen is once you do register for self-assessment, HMRC will write to you with a unique taxpayer reference number or UTR. This will enable you to be able to complete your self-assessment tax return forms online and submit them to HMRC. Alongside this, you'll need to register for national insurance contributions. It is quite important to make sure that you're paying the correct amount of national insurance contributions. You are eligible for class 2 credits, but you still need to make sure that you are within the right category, etc. Mainly because when you come to retirement age, if you haven't paid enough qualifying years for national insurance, it does mean that you're not eligible to draw down the full state pension in the future. So it's definitely something to be aware of. There is a web page on the DWP .gov page that you can look into your national insurance NIC history. So it might be handy just to have a look to see if you need to back pay to top up any of the previous years. Um, like I said, the online registration is quite straightforward. It's about a one-pager document on HMRC website. If you do get stuck, do give me a shout if any of you need to do that. I'm more than happy to help with that one. And then this is a big one. I could have easily done about 10 slides about this, but I wasn't going to. To do with allowable expenditure is one of the biggest kind of questions that I get as an accountant, probably for self-employed freelancers. Um, what can I claim as an expense? There's so many things out there, and depending on the trade, the type of business you're in, it depends on what you can claim. But I've listed a few here. This list is not exhaustive at all, so please don't quote me on this list, but it's just a few of the typical ones. So you obviously have all of your kind of admin costs, all those kind of things, and that can be anything from notepads and pens to a new laptop if you're using it for business, anything like that. All of the office admin supplies. Travel costs, I'll come back to that one in a minute, actually. I'll talk about traveling for work in a minute. Marketing, that's marketing and advertising. So business cards, for example, that's a form of advertising. If you're putting any paid adverts on Facebook, Instagram, any of the socials, or equally if you're placing an ad in a local magazine, a paper magazine, maybe a leaflet run, all of those are allowable costs and can be used against your income, working out your profit. Business insurance, that's something that obviously is a business expense. Mobile phone costs. Now, I'm well aware that most people probably don't have a work phone and a personal phone. Um, if you do, great, you just claim for the work phone. If you don't, you are more than fine to be able to claim a proportion of your personal phone costs for business because most of us would be, I don't know, checking emails on there for work or potentially ringing clients maybe, or you've got your socials on there for your business. So you're more than fine to be able to claim a percentage of that. So what I would say is if your mobile phone cost is say £20 per month, and you're using it, I don't know, for argument's sake, a quarter of the time for business, that just means £5 per month is allowed as a business expense. So just making a note of that when you come to your year end. Similarly, home running costs is something that can be used for working from home. So, because most of us would be working from home and not renting out an office, we can claim a percentage of our home costs. So, the more complex way of calculating this would be looking at how much mortgage you pay or rent if you're renting, council tax, water, gas, electric, house insurance, contents insurance, all those kind of things, adding it all together, and then dividing it by the number of rooms that you have, how much of the room you use, and how often you're using it for your work. It can be quite a complex calculation. And fun enough, I've just seen on that photo that's there, that's what I'm doing in that cell. It's working out a use of home as office calculation. Um, but it can be quite a lengthy calculation to make depending on the size of your house and also the cost of running your house, it it could be more beneficial to work it out that way. But the easier way and the way that most people tend to use is using the flat rate scheme that HMRC allow. So the flat rate scheme is £6 per week, and that is literally a flat rate scheme. So it doesn't matter if you work 1 day a week or 7 days a week, it's £6 per week. And £6 a week is £312 for the year. And you could just claim that as a flat rate expense. It is much, much more straightforward doing that than the calculation I was just talking about. However, like I said, because obviously living costs are higher these days, calculating a percentage of your mortgage and all the other bits, it could potentially work out to be higher than £312. So it is worthwhile doing, even if you just do it as a one-off calculation and seeing if it works. I'm more than happy to help if you get stuck with that calculation. Similarly, I'll just bounce back to the travel costs that I mentioned. So because we're all working from home, you can claim anything that is traveling to do with your business. So that could be anything from your house to, say, you're meeting a client at a coffee shop or you're going to a client's house to drop off something, whatever. All of those are classed as business miles. Now, again, there's two ways to calculate this. The more complex way is to add up the total of all your petrol or diesel costs throughout the year, plus your annual MOT costs, plus your, I don't know, any garage repair costs, insurance, road tax, all of those things. And again, you divide it over how much time you spend in your car for business compared to personal use and work it out that way. However, HMRC also do a flat rate scheme for mileage, travel costs, and provided you're not driving more than 10,000 business miles a year, it is much more beneficial to do this. What I would say is just allowing people to claim the flat rate scheme, which is 45 pence per mile, up to 10,000 miles, is much more beneficial in the long run. So I would definitely recommend calculating that. If you do over 10,000 business miles a year, it then drops down to 25 pence a mile, which is still fine, but 45 pence per mile tends to work out as a higher expense at the end of the day once you work that out. Like I said, there's a long list that we could go through. Accountants' fees is one of them that tends to get missed off as well. Consumables, things like that. Obviously, any tools that you're using for your business, they're all allowable. If you do get stuck and you're not sure, do give me a shout. I'll happily point you in the right direction and tell you whether something is allowable or not. Um, Again, I know I keep saying it, but keeping accurate records will help this really, really well, and especially using some form of software will help you. Just trying to keep track of everything in the long run, and also coming into the MTD season as well. So completing your actual kind of tax return form, sorry, at the end of the year. So most of you are probably aware, but the UK tax year runs from the 6th of April to the 5th of April, and then you have from the 5th of April to the 31st of January the following year to be able to complete your tax return, submit it to HMRC, and also pay any tax liability that's owed. Um, what what tends to happen is people leave it to the last minute. I've got many, many clients that do that, and I myself have done that as well. Life gets in the way. It's very easily done. You think I'll just do that next week, next week, next week, and then you end up in the middle of January panicking. Um, what I would say is the earlier you do it, the better, not only for peace of mind, but also for budgeting as well. So if you are potentially going to have a larger tax bill that maybe you weren't aware of, maybe you made more money last year than you realized, and the profit was higher, so therefore you've got a higher tax bill. Um, if you do it earlier on in the year, you've got more time to be able to budget for the tax that's due to be paid by 31st of January. If you are ever late submitting your tax return and late paying, HMRC are not ones to shy away from giving you some penalties and charging interest on any taxes that are due that should have been paid. So I definitely would recommend trying to do it earlier rather than later. One of the things I would say is once the tax year finishes on the 5th of April, if you have it in your mind that you try and get it done over the summer months, maybe just before maybe the kids go back to school in September, something like that. If you can, I know summer's busy anyway, but just something like that. If you've got it in your mind that you want to try and get it done, maybe by middle of September, say when the kids have gone back to school and you've got the first week, just to try and get it done then. And then at least you have got a couple of months left before panic in December or January. Again, using accounting software will help here. It definitely will, because as long as you've been keeping your software up to date, it's definitely beneficial using a software because, like I said, as long as the software is up to date, when you come to do your tax return, everything is already there for you. And you just need to maybe add in a few extra bits to your tax return to be able to get it submitted off. So once the bookkeeping and all the software's done, you're good to go, really. And then I'm obviously going to promote myself at the bottom here, but if you do get stuck, you can message me or ring me, whatever. I'll put my details in the chat in a minute so you can all find ways to be able to contact me if you do get stuck with anything. So we have different kind of bookkeeping systems out there. So, like I said, accounting software is great, obviously. You can just use a simple spreadsheet. Making tax digital will mean that software will be required. There's different phases coming in as to when you will need to register for MTD, which I'll explain in a minute. But up until now, if you've been using a spreadsheet, that's absolutely fine. You don't need to have used a piece of software. And you can still use that for the next few years if you're one of the later ones being entered into MTD. So don't worry about that at all. What I would say is a good bookkeeping system, whether you're doing it yourself or whether you decide you want to pay somebody to do it for you, it definitely helps with completing the tax return bit online in plenty of time. Because, like I said a minute ago, if your bookkeeping is all up to date, then most of your tax return is already done for you. So it's definitely well worth keeping track of everything and making sure everything's up to date as quickly as possible. Whether that is you're doing it yourself or getting somebody else to do it for you. Cash flow. So this is something that people tend not to really understand or get involved with, but it's definitely something that I would recommend looking into. So cash flow is just basically looking at the ins and outs of your business, maybe keeping track of it a bit more regularly than you have been potentially. It creates a lot more space for planning and future growth for your business if you are wanting to do that. So there's definitely a correlation between a higher success rate for a business if they understand their cash flow. That could mean that it helps budget for bigger purchases, say, within the business, or it can help growth within the business if you're wanting to potentially get some grants, say business grants. It's always handy to have cash flow projections. or just in general, if you're wanting to just grow your business, at least you know how much wiggle room, we call it, that you have to play with there for your business. Again, like I said, that you can use software, you can use Excel for now, but I would definitely recommend looking at different bookkeeping softwares or the accounting softwares that are out there. The main two that I tend to kind of recommend for people are QuickBooks and Xero. They're the main two, as it were. They're the most common, the most well known. Not necessarily the best. I'm not saying that at all. It is just they're more middle of the market, so they're not really, really expensive, but they definitely do everything they say they do, if that makes sense. I know there's a lot of kind of business bank accounts out there. I think Metal is one, and I want to say NatWest is another that offer free agents, I believe it is. Again, free agent is absolutely fine. You can use the free bookkeeping software that's out there. They all do the same thing, pretty much. It's just some of them are a bit more complex depending on the size of your business. So if you needed a more of a specific recommendation, I'm more than happy to touch base with some of you individually if you want, and I can recommend something for you. But I would definitely say QuickBooks and Xero are the main two, and I believe both of them also offer like demo companies or a free 30-day trial. I can't remember which. I would definitely recommend having a play around with them and just see which one works best for you. For example, I prefer QuickBooks for me personally. I just prefer the way it looks, the way the user interface works, etc. It doesn't mean it's better than Xero at all, because my husband, who's also an accountant, much prefers Xero. And it's one and the same thing. So it really doesn't matter. Xero to me, maybe it's a man thing, actually, think about it. Xero is very much more clinical looking and more professional looking, in my opinion, which is great, absolutely fine. QuickBooks is more bubbly and friendly. I don't know. Have a look. Tell me what you think. That's my viewpoint anyway. Right. If we look at making tax digital. So making tax digital, it isn't that scary. I know a lot of people are really, really worried about it. It's really not anything to be that concerned about. Making tax digital did actually come into play a few years ago in April 2022, I believe it was. So 4 years ago now, and it's basically just making everything digital. That's all it is. So HMRC are wanting everything digitalized going forward. Um, it's not necessarily to catch people out, but it is partly to make sure that HMRC are happy that they are recouping all of the taxes that they should be recouping in the long run. Um, what I will say is it will smooth everything over and streamline everything for you once you get used to this new system. So it might take the first kind of 12 months to get used to the system. But once you have done that, I am almost certain that you will find this a much easier method of keeping track of your income, expenses, all the rest of it. So I would definitely recommend kind of giving it your all, as it were, moving forward. What will the VAT registration for MTD came into play in April 2022. So if you're already VAT registered, you'll already know this, that you're already part of the system anyway. But this is the new system as of April 2026, in a couple of weeks, is for people that are self-employed and or have rental income. So that's what we're going to be talking about now. Again, digital record keeping. So again, all your invoices and receipts will just need to be kept digitally, which accounting software will do for you, like I've said a few times already. There's lots of different types out there, like I've mentioned already as well. There are, oh, sorry, I just clicked off the page. There are penalties coming into play for non-compliance with MTD, but also with if you're late with completing any of the quarterly updates that are due. What I will say is HMRC have actually said that they're going to hold off sending out penalties for the first year, whilst everybody just gets to grips with everything, including themselves probably, because there's going to be a lot of issues, I'm sure, their end. But yeah, so don't worry too much this year coming up if you are part of this cohort, which I'll explain the cohort in a minute. but yeah, they will be bringing in penalties moving forward, like they do with the self-assessment as well. Okay, so these are the different kind of cohorts, as it were. So Making Tax Digital for VAT was brought in April 2022. Making Tax Digital for income tax, so this is for self-employed people and or rentals. If your income was over 50,000, now this is for the 24-25 tax return that you should have already done by now. If your income was over 50,000 for that period alone, not this period that we're in now, but for the 24-25 tax year, then you need to register for Making Tax Digital within the next few weeks by April 2026. If your income is over 30,000, that would be for the 25-26 year. So that's this current tax year that we're in now. Then you'll need to register by next April 2027. And if it's over 20,000, which is going to capture most freelancers, I would say, you need to register by 2028. What I will say is when they say income, they don't mean taxable net profit. They do mean the gross income that you're receiving. So the income that comes into your bank account before you take into account any expenses whatsoever. So what I will say is there is a website, a webpage, sorry, on the HMRC website. And I'll happily send you a link which lists all of these different dates and all of these different thresholds. So you can take that away from you to have a read. But yeah, so that's roughly the cohorts that they're introducing over the next 3 years. These are going to be the new deadlines. Now, this may seem a bit scary to some. It's not going to be too scary once we get used to it. I think once the first year's out the way, it will become easier. I'm telling myself that more than you. Because I've got a lot of these to do now. But the standard period that HMRC are implementing is going to start from the 6th of April because of the start of the tax year, which makes sense. And it will run for the first 3 months. So that's 6th of April to the 5th of July. What HMRC are allowing is you can change to the calendar period if you prefer, which will literally just be the first 3 months in a calendar. So the calendar of the tax year, if you see what I mean. So like the 1st of April to the 30th of June. I personally think that's so much easier because you don't have to worry about those odd 5-6 days at the beginning and end of each month. But it is personal preference. As long as you choose one and stick to it for the whole year, it doesn't really matter. As long as you cover the whole 12 months by the end of the 12 months, it doesn't matter which way around you do it, as long as you're consistent throughout the 4 quarters.
Alicia,
So whichever,
Alicia,
hello.
you've got a question from Sue here. Sorry if it's stopping you mid-flow. Do they
That's right.
include employment income in those figures?
Oh no, so that's purely self-employment, so the freelance work, and or rental income, not employed role. No, nothing that's employed at all. No. Um, yeah, so once you choose which period you're going to use, the deadline days, the submission days are all the same for everybody. So for the first quarter, it'll be the 7th of August, and you can read the rest of the table, obviously. And then when we get to the last quarter, it's classed as the final submission for the year, and you will kind of encapsulate the whole year. So if you're using the standard period, it will be the full tax year, 6th of April to the 5th of April. If you're using the calendar period, it'll be the 1st of April to the 31st of March. And you have until the 7th of May to submit this information to HMRC. Now, that doesn't mean your self-assessment tax return deadline is changing to the 7th of May. This is purely for your self-employment income and or rental income. It is not your self-assessment tax return. So like Sue was saying with the employed role, if you have more than one role, so if you have a self-employment and you're also employed for argument's sake, when you submit this final quarter by the 7th of May, you're only including your self-employment income and expenses. When you come to do your tax return, which will still be due by 31st January the following year, as normal, same as it is now, that will be the one that will include, any investment income, your employment income, whatever other sources of income that you already declare anyway. So that's the kind of new deadlines, as it were. Like I said, there's a web page on the HMRC website, which I'll ping over a link later, for all of you to have a look at, which lists all these different dates and the different criteria. So hopefully that will help list all of that out for you. Right. Okay. So again, I sound like I'm harping on now. Really making sure that your accounting software and the bookkeeping and everything is up to date will really, really help with this, because making tax digital, I think, is scaring a lot of people, because especially the people that haven't necessarily kept up to date with their bookkeeping up until now. Um, that's the reason why people are quite wary of MTD. I do genuinely think once you get on top of that, and once everything is being kept in line, it will become so much easier in the long run, because you'll just get so used to, at the end of each 3 month period, if you haven't done it already, you need to do the bookkeeping, you need to keep everything up to date. You're going to do the quarterly submission, and then you go on to the next period. Yes, it's a bit more faff, but if it's taking up too much of your time, kind of admin time, as it were, it may be worth hiring like a bookkeeper who can just do this for you. They charge less than accountants, so they are cheaper. Equally, accountants, tax advisors like myself, we're happy to help, but I would say bookkeepers are cheaper than me. So they might be a better solution for you. Um, and then what I will say is HMRC do have a really good set of webinars and different guidance out there at the moment, which feel free to have a look at. They are really, really useful. And they're great to like kind of little short videos, as it were, just to keep track of everything, and comply with everything to do with MTD moving forward. Okay. So coming to the end now, I'd be glad to know. It's these are just some tips and tricks here that I've just put listed out. So there's lots of different things you can do to try and get information about anything at all, accounting, tax, making tax digital, whatever. HMRC and the Gov UK websites, yep, they're great. They have a lot of information on. Some people find them quite overwhelming. I will say, me included. There is a lot of information on there, and sometimes I've used the word meaty here. They can be really, really heavy going and meaty, and sometimes using tax legislation is quite hard going to read for the average Joe, as it were, and for me, and it is not something easy to comprehend. So I'm more than happy to try and dissect things if you do get stuck. Um, there are lots of kind of online forums that help, some kind of tailored, as it were, to freelance mums or freelancers. What I would say there is just be very wary that they are basically chat forums. You can't necessarily guarantee that third party advice is going to be accurate to your specific needs. Yes, it's great for free advice, but it may not be the correct advice. So just be wary there. Lots of the different accounting software packages out there also come with different apps or add-ons, that can help keep track of things. Like I was saying, that keeping track of receipts and stuff like that. That's definitely handy. If you do need any specific recommendations for your actual trade, whatever trade you're in, feel free to give me a shout. I'll help there. Obviously, freelance mums is a perfect network for everybody to help each other. And we all obviously, as you know, help each other and support each other, not just with tax, but just in life in general. But if ever you do get stuck, please do shout. I'm more than happy to help out, and I'm more than happy to give out free advice to a certain extent. So do please shout if you get stuck or confused with any of this or anything else. I've put here just a list of different kind of pitfalls to avoid. Number one, which I spoke about at the beginning, was just mixing the personal and the business expenses. It can cause a lot of confusion, so I definitely would recommend trying to separate things if possible, just to try and avoid any confusion or potential issues when you come to complete your tax return. Missing any of the registration deadlines or missing completing your tax returns, like I said earlier, you can get some hefty penalties. I'm not trying to scare you from HMRC, but they can be hefty, and they can double up on your penalties as well. So I've put here about underreporting income. I'm not suggesting any of you do this or would consider doing this, but if you were to accidentally, say, miss off a whole month's worth of income, say, and HMRC were to find out for whatever reason, however they do that with their banking knowledge, etc., HMRC can impose a penalty up to 100%, which is quite scary actually sometimes. So if you missed off a whole load of income for 1 month, say, for whatever reason, and you've accidentally missed it off your tax return, say you've got an extra, I don't know, £500 worth of tax to pay that you just forgot, and HMRC have found out, and they send you a letter in the post and explain that they found this out, they can impose that £500 tax bill that you should have paid, but also impose a £500 penalty for missing it off. So you'd end up paying twice. And it can add up quite quickly if you're not careful. So, again, not trying to scare you at all, but just making sure that everything is accurate is really, really important there. And it just avoids any issues moving forward. If you need any more kind of help, HMRC do actually have a phone helpline, which is great if you can get through. They are an absolute nightmare. They are notoriously bad at answering their phone. Their wait times, if any of you have tried, I really do apologise on HMRC's behalf. It's a pain in the ass. But I really would recommend ringing them either when they open up bang on 8 a.m. That's the best time to ring them. Or I think their lines open up until 6 p.m. So I would recommend ringing at like 5:30, quarter to 6 if you can in the evening. They're the best times. You'll still have to wait, but they're the best times to try and get through without having to wait like 2, 3 hours potentially sometimes. Obviously, accountants out there that can help freelancers. I'm going to pick up myself here, obviously. But yeah, there are many accountants out there that do specialize in freelance help. So feel free to contact me or any of them. There are some workshops and online kind of mentoring programs I've put here for tax and accounting skills for freelancers. You can pay different packages. I can't actually guarantee any of them are any good as such, but I know when I did a quick Google to see that there are a fair few out there. So feel free to dip in and out if you find anything that seems good for you, if it helps. And I have put at the bottom here, as we all know, having a network like Freelance Mum just helps with day-to-day life, business, etc. But I was wondering whether it would be handy for any of you if I were to set up some kind of like tax club. I don't know what to call it. I just put tax club, where I don't know, we could do like a Zoom call once a month or something, and I'll just stay on. I'll be working for an hour, and you can just dip in and out and ask me something just for a cheap cost. I don't know if that would be handy for any of you, or like a Facebook group. I don't really know how to run it, to be honest, but it was just something I was thinking whilst I was pulling these slides together. And then I can keep my costs really, really low for that because it wouldn't be specific advice for you, but you can just ask me anything you like, really. So I was thinking, for argument's sake, if you're in the middle of doing your tax return and you can't remember, oh, Alicia mentioned something about mileage, I can't remember how much it is per mile, you can just hop on and give me a shout and ask if you want. I don't know. That's just something by the by. But I'll let you have a think and feel free to message me if that's something that you would want to join at a later date. And I've just done a rounding up page here with everything that we've spoken about, and obviously my name and contact details if you did want to contact me at all for any questions. And feel free to ask any questions now.
Alicia, that was absolutely amazing. And
Oh,
I
bless
think
you.
I just want to say, I think you're the most cheerful, lovely, personable accountant I've possibly ever met. You're getting lots of
Aww.
people saying the tax club sounds good. Oh, it doesn't feel quite so scary now, does it? Yeah, that was so helpful. Thank you. I'm not going to keep talking. Has anyone got any questions that you'd like, questions or comments, however it works best for you? Kelly, your hand's gone up.
Thank you for that. That was really helpful. One of the questions I've got is I am good at keeping on top of things, but I do, well, as a virtual assistant, it's hard to find expenses sometimes to put against my accounts. And so I am a bit guilty then of going back through things like my Amazon account and looking at at the end of my tax year, what I could pull off from there to help what I've used, obviously, for my business. Does that mean I'm going to have to do that on a quarterly basis now, or are there things like that I would wait and do at the end of the year that I can still do yearly?
Yeah, okay, good question. So you are right, you don't have to do. So HMRC is saying what these quarterly returns, the new quarterly returns that they're bringing in, are going to be a light touch. So what they mean by that is as long as you're keeping track of roughly, I say this nervously, roughly the correct amount of income and expenses for each quarter, By the time you come to complete your last quarter, that is when you can add in the final expenses, things that maybe you've missed off throughout the year, or mileage, say, that you haven't kept track of each quarter. You can add that into the final one. Like I was saying, the flat rate for using your house as an office, the £6 a week, you can add that one into the final one. So it does mean that the last quarter is going to look odd, kind of skewed, as it were, for net profit wise. But the full year will still obviously encapsulate all of the expenses. So like I say, HMRC are calling it a light touch, so it doesn't have to be entirely accurate, and you don't need to be, dividing everything by 4 just to be able to keep everything up to date for quarterly updates. But they are just wanting to try and make sure everything is as accurate as possible given the information that you have. So as long as most of the income and the expenses that have run through your business bank account are there, I don't think there's going to be an issue. Not at all.
Thank you. And a really, really quick, hopefully, question is, in terms of what you can claim on expenses, I noticed you didn't mention anything about sort of meals, refreshments, coffees, but you did mention about sort of travel to a coffee shop. Can you clarify that for me? Because I've always been unsure whether if I'm meeting a client or an associate, if I'm allowed to claim for those sort of things.
Okay, so this is a grey area, and there's a reason why I didn't bring it up, because I hate talking about this, because it is a
Sorry.
really, really grey area with HMRC. HMRC don't have a hard and fast rule. If ever you were to be inquired into, it depends who would be the HMRC tax advisor that's inquiring into you. In my experience, some of them are very lenient and go, yeah, sure, you can entertain clients. Of course you can. You can buy them a coffee once every 3 months, whatever. Other ones will say, no, business entertainment is not allowed. So it is very much hit and miss. What my rule of thumb is, as long as you're not buying them a slap up 5-course dinner several times a year and spending a lot of money, HMRC may frown upon that. I wouldn't do that. But the occasional meal, coffee out, yeah, obviously fine, absolutely fine. Equally, networking, for example, is an allowable expense. So like the freelance mum membership, that's an allowable expense. And also buying the coffees on the net walks, that would be classed as an allowable expense because you're networking, so that would be classed as advertising. So that's all fine. Business entertainment is the grey area, unfortunately. So I don't really have a hard and fast rule there, but I'd say I'd highly doubt you were going above board there and buying a lot of booze and alcohol along with each meal, etc. But yeah, just be wary.
That's a
Thank
great
you.
answer. Thank you, Alicia. And great to know that freelance mum is a great expense there. Emma, over to you. You've got a question.
Hi, Alicia. Thank you. That was so useful and interesting, and I'm definitely interested in the tax club as well.
Ah, good.
Um, I had a question about keeping a separate business bank account. Does
Yep.
it have to be an actual business account, or could it be a personal account that you use for business?
Yeah, so I would say keeping a separate personal bank account is absolutely fine. It can be a separate personal account, doesn't have to be a business one, because I know a lot of banks and building societies charge for using a business account, so that's absolutely fine. What I would say is HMRC are trying to implement that you have to have a business account. For example, if you're running as a limited company, you have to have a business bank account. You can't use a personal bank account. As a self-employed person, at the moment, you can use a business. I'm getting confused. As a self-employed person, at the moment, you can use just a personal bank account. That's absolutely fine. But I would definitely try and keep it separate. So yeah, if you have one personal bank account that you're only using for business, that's fine, absolutely fine. But that may potentially change in the future. Like I said, HMRC are getting wise to those kind of things. But yeah, at the moment, if you're self-employed, a personal bank account is fine as long as it's separate. Yeah.
Okay, thank you.
Thanks for that, Emma. Anyone else got any other questions to put to Alicia while we have her? Okay. That was amazing. Thank you so much, Alicia. That was such a useful lunch and learn. Great to see that you got a few people interested in your tax club as well. I think that's a brilliant idea.
Yeah.
Yeah, really good. Well, to know that you can actually put your questions to a proper accountant and get an answer, I think that's worth its weight in gold. So yeah, good for you. Okie dokie. I will put this in the mothership and also raise the question about the tax club for you, Alicia. That sounds fabulous. Thank you so much. I'm glad we got all the tech working. It's been gorgeously gorgeous to see you. And yeah, look forward to seeing you again in Devon soon or online. Yay.
Amazing.
I do have a little question, so that was in the chat.
Oh, sorry, missed it, Claire. Go for it.
Yeah.